Good morning, everybody. Welcome to the Flow Show. New week begins Monday, 18th of November. Hope you all had a good weekend. Excuse me if I sound a bit rough. I'm recovering from a triple 50th birthday party this weekend. So still feeling the effects of trying every shot in the bar over the weekend. So yeah, I'm hoping for a quiet one today myself, but let's hope it's busy for trading purposes and the rest of you guys and girls. Right, let's get cracking. New week, old news, new things to get our teeth stuck into. PBOC continue to fix the one reference rate at 7.19s, 1907, down from 1992, last week's fix. So they're still trying to keep brakes on the one at the moment. Citi have juggled their magic 8-ball to see what the future predicts for Chinese growth. The number they've come up with this time is 5% for Chinese growth for this year. Well, in the last month and a bit of 2024. So if they can't get their forecast right at this stage, no idea what they're getting up to. Anyway, so they've raised their forecast for China GDP this year to 5% from their prior forecast of 4.7%. Which they cut in September, so just less than a couple of months ago. They cut it from 4.8 to 4.7%, and now they've hiked it all the way back up to 5%. As I say, shake that magic 8-ball. We've heard from Ueda after a long spell on the sidelines. Speaking in Parliament, he said Japan's economy is recovering moderately, albeit with some weak signs. He said we will continue to raise the policy rate and adjust the degree of monetary support if the economy and prices move in line with our forecasts. So sticking to the script, he said we must be vigilant to various risks, including overseas and market developments. It says the overall trend in private consumption has returned to a moderate increasing trend. He says the reason for this positive, albeit not strong development in private consumption seems to be the clear increase in nominal wages on the back of a rise in scheduled cash earnings. Says he won't comment on short-term FX moves. Says we will scrutinise at each policy meeting how FX moves affect our economic price forecasts and risks. Doesn't think there is a huge build-up of yen carry positions either way compared with the situation in July. So overall, there's elements that will keep them on their hike path, though he gave no clues as to how close they are to hiking. But says he's seeing a pickup in consumption, so that is good news. But no real comments there to, as I say, suggest when the next hike will come. Doesn't put anything towards the December meeting, but plenty of data to come until then, and no doubt some more wafflers as well. Over in Australia, Goldies have cut their 2025 GDP forecast for the Down Under mob. Now see 2025 1.8% versus 2% previously. We do get the RBA's minutes of their last meeting. I think it's tomorrow, or overnight tonight, or tomorrow, whenever it is. So we'll get to see exactly what they think in a bit more detail over the last meeting. ECB's Big Onion, Cipollone, says we can and should reduce further the current level of monetary policy restriction. The pace and extent of the reduction, though, depends on incoming data. Speaking of data, there wasn't an awful lot out overnight. We did have a bit of PPI data from New Zealand coming in a little bit hotter than expected. A lot of market, or a few people in the market expecting the RBNZ to potentially go another 50 pip cut. But that sort of data won't help that cause at all. A bit of softness in Japan machinery orders for September, down 0.7%, down 4.8% year on year. It's a bit flip-floppy, this data at the moment, but it was expected to rise in both cases, but instead it posted a negative. So that sector. Not looking too good there. Coming back to data from last week, we had a ton of data. Retail sales, obviously the big numbers there, although it was a bit, you could call it a bit of a softish report. Headline sales posted a positive 0.4%, but some of the X's, like the control group, which is sort of core sales, came in at minus 0.1%. Another core measure coming in at 0.1%, a little softer than expected. So retail sales wasn't all that good overall. Then we got Empire State Manufacturing, which came in at a very hot 31.2. Now this one has been quite volatile of late, so not really much to take from that. It is the first manufacturing data for November. New orders look like it did most of the heavy lifting, coming in up 28 versus a minus 10.2 previously. Prices paid dipped back a tiny bit, 27.8 from 29. Prices received went up to 12.4 from 10.8. Employment fell to 0.9 from 4.1. So the details a little bit sketchy underneath that headline, but decent number for the new month anyway. We also got this import and export price data, which again a little bit sticky. If depending on what you look at, pretty much all greens are beating expectations month on month. Import prices 0.3, year on year 0.8. Export prices year on year came in minus 0.1, not as much as the minus 1.7 expected. So again, a little bit hot. And on the month, 0.8% was expected to come in minus 0.1%. So sticky for more inflation data. So that's now PPI, CPI we've seen, and this number we've seen where things are still sticky, and we've got PCE to come. So I don't think it's this week. I think it's next week. But we'll have a look at that on the calendar in a moment. Anyway, so overall for the US data, retail sales a little bit iffy. As I've mentioned, can be a bit of a funky report coming ahead of the big holiday season, sales events, Black Friday, all that palaver to come. So now we're going to have to take November and December's retail sales as a whole, as opposed to individual months. Over at the Fed heads, Boston Fed's Collins said a December cut isn't a done deal. So there's more data that we will see between now and December, and we'll have to continue to weigh what makes sense. Fed's Goolsbeest said the basic story of the economy remains one of falling inflation and labour market cooling to full employment. So it's hard to reconcile recent weak jobs data given the storm impacts. Says as long as inflation continues to come down, rates will be a lot lower than they are now. But if there is a disagreement over the natural rate, it does make sense to start slowing the pace of rate cuts. Fed's Barking, out with the news after the event, said he always expected core PCE to stay in the high twos in the second half of this year. After all that data yesterday, on Friday, traders brought down the odds of a December rate cut to about 50%. So around about 50-50 as to whether they cut in December. That's where the market's sitting. So we'll keep that pendulum monitored, because obviously it can swing data point to data point. Now, one thing that, again, is just, I would say, ringing a couple of small, very tiny alarm bells. And, you know, I've pointed this out before. Just when you get a lot of headlines of the same ilk crossing in front of my eyeballs, it tends to strike a bit of a chord. So I'm just starting to see a bit more, or a few more headlines talking about job cuts again. We had this previously, but it didn't really turn into anything. It's just picking up again. Not big numbers, but still, it's the amount of headlines I'm seeing that may be cause for concern. So General Motors last week said they're going to be cutting around 1,000 salaried staff. AMD last week also said it was cutting around 4% of its workforce. That's around 1,000 people as well. In Europe, Unilever's looking to get rid of 1,700 workers as part of global cuts. HSBC is looking at layoffs, and they apparently have asked hundreds of managers to reapply for their jobs. So again, in a short space of time, just seeing some job cut headlines rolling across the screens. We'll see if that picks up into anything significant. But 1,000 here or there is going to make a huge difference. But you get 10 more companies and you get 10,000 people, and it just can snowball a bit. So just highlighting that I'm seeing that coming across the screens a lot at the moment. Geopolitics. So we've had headlines over the weekend that Biden is going to allow Ukraine to use US arms to strike inside Russia. Now, this has been the tit for tat goings on at the moment. It's been threatened for a while, and the West has been holding off allowing such use of weapons. But it seems this, with North Korean troops now being put into play, it seems like the restriction is being switched off. So Biden's taken the first step. Other countries like France, UK, Germany are considering those moves as well. Now, this was a sources piece only from, I think it was CNN over the weekend. And we was waiting to see. We've had a bit of indignation, as you can imagine, from various Russian people, politicians over there. But everyone was waiting to see what Putin or the Kremlin would say. The Kremlin have come out and they're giving it a bit of a brush job, saying these reports did not have official sources. And if such a decision has been made by the United States, this will usher in a new round of tension. Russia has obviously previously warned that if weapons were allowed to be used inside Russia, it would be seen as an escalation. But again, it looks like a bit of tit for tat for them dragging North Korean troops into their war. So that's bubbling over. But for now, Russia's sort of brushed it aside, which is better for risk than the original headline was. Anyway, we'll have to see how that develops. Right, that's really it from the headlines and whatnot. So we'll take a look at what's coming up this week. Not too much today. We've got some housing market data coming up from the US, a bit from Canada as well. Tuesday, as mentioned, RBA minutes, and then we get some numbers from the Eurozone, CPI data. I think this is the flash number for November. Let me have a look. Yes, it's the flash number. Okay, so this is the first number we're going to be getting. I think so anyway, from the Eurozone. Oh, now I've got rid of everything. Let's get that back up. So we'll keep an eye on that one. Canada CPI data as well. So that'd be big for what the BOC are up to. Again, another 50 is being touted by some people at their next meeting, but we'll see if this data is going to be hot or not. Housing starts and permits on Tuesday as well. So that'd be good to see. We say kicking off a bit of housing market data this week. China, we've got a rate decision, the LPR rate coming in there. We'll see if they want to tinker with that once again. Then we get UK CPI data coming through as well as PPI data. So that'll give, again, feed into, all this is going to feed into what's happening at the next December meetings, which is where we've got most of the meetings coming in now, the last of the year, which these meetings, aside from what they may do for policy at that meeting, it's going to be a big deal for what they're going to push forward for next year, ideas and their thoughts for next year. A lot of these meetings are going to be forecast meetings, particularly the likes of the ECB and the Fed. So we'll get to know how they're going to view things going into 2025. On Thursday, some minor data from Europe in the morning. Further US data, Philly Fed manufacturing as well, which is the second manufacturing number of the month. Existing home sales, but otherwise not too much there. And then on Friday, we kick off with all the PMIs for the new month as well for November. So all the flash numbers starting to come out from around the globe. And we've also got UK retail sales in the morning too, just to think what those are going to look like. It can be up and down like proverbial, well, I won't say it, but it can be up and down a lot, UK retail sales. So that's what's coming this week. Not overly busy, a few bits and pieces in there to keep us interested. Oh, nearly missed it. Japan CPI on Thursday. That's going to be potentially big number, as I say, feeding into the next BOJ meeting. So keep an eye on that one. So plenty to keep us going, but as I say, not huge data apart from these CPI numbers. So looks like we'll be looking for other things to keep us entertained by the looks of things. Right, let's get a set up for this week. Let's see what else is happening in the price front. Not too much this morning. We've got a lot of pairs still looking in sort of dead cat mode at the moment. We've had a few bounces off support levels. Euro dollar bouncing off the 105, holding up okay. We've had a few little dips back, but it's not quite had a go back at those lows, but neither are we looking like we're pushing much higher as well. So there's really two stages this one. We've got the obviously the down move since the 112s, which has been by and large pretty one way, but then we've got this phase here. So still we're in a situation where we've got to get back above 106, 106.10, the top of this temporary zone I've got in at the moment. Get back above there, we start to just turn around this portion of the trend, okay, from the 109s, but that will just be a small step compared to the bigger trend. I've not put a fib in yet because I don't know if we've stopped falling, and the fib will be much higher anyway. So unless we're really getting back above 107, the downtrend still remains pretty strong. So despite holding this 105 level, we are certainly not out of the woods just yet. So a lot of work still to be done from this. And as mentioned, a lot of pairs looking very similar. Cables looking perhaps a bit weaker than the euro on that front. Not bouncing too far at all, and quite willing to come back towards this 126 level. So this one's looking very, very weak. Here, this one needs to be above 127 and holding again to even try to make a dent in the downtrend. So that's the area that it needs to get above. But at the moment, can't even get back above 126.5. So that remains very, very weak. I'll just flick through some of these. Aussie dollar, same story. We've got this 64.40 area, which is a bit of a funny number. I'll see if I can show it, but it's one of those levels that goes back quite some time, as you can see, right back to February, back into 2023, and then you'll have to zoom in, but you get little touch points. Oh, where are we going? Here, little touch points through there, and going back further as well. So bit of a strange number, but levels are level. I'm not there to argue what makes them up. I'm just there to see whether they do something or not. So for now, we're holding this 64.40, but we can't get through 64.80. So this is too tight a range to stay in for too long. So something's got to happen here. Either we're going to break down and continue going, and then we're probably looking at testing these lows down here, 63.5, maybe even that little dip under, or we need to get above 64.80, but that will be, again, just be a small step. Really, we need to be above 65.10, and then more so 65.35, 40-ish, to start trying to turn this around. But otherwise, it's still looking very weak down here. A lot of pairs, as I said, looking the same. Kiwi back down on the lows, which doesn't look too hot at the moment. And Kiwi's looking like the weak link amongst those two. And that's showing up in Aussie Kiwi, which is back above my level here. It's becoming a bit washed out, this level. So I'm more going to use it as a bit of a pivot point than a lean against point. And we're up testing this 110.50s area, which we keep messing around. We tried breaking it and we've usually failed up towards 111. So I'm still short this, still dabbing around. I would look to add a bit up here, but I might look to see if we get another move to 110 90s. They'll go in there pretty quickly, would put the pressure on a potential break. So I'm going to, as far as adding back to my shorts, I'll keep an eye on this one if we get up there, just to see if we get a break above and maybe a move back higher. But this one I'm still playing more from a longer term, waiting on the RBA to potentially turn further away from its hawkish rhetoric into something a bit more dovish. But I might be waiting on this one into next year before that starts to bear some real fruit. But we shall see. Those minutes tomorrow might help it along. Dollar CAD looks like it's on the oil bus, where we're seeing some other pairs. Dollar yen was looking a bit weaker today. We were seeing cable euro dollar rising a little bit, but that's coming off a bit. We've been knocking around this 141 area, not quite breaking it. We've had a couple of little probes above by a couple of pips. So until we get above and hold above, then there is a chance of a bit of a pullback. 140.70 is a level just to keep an eye on, just a short-term level. We paused there on the way up. We're pretty much holding it as support on the way back down. So that's the first area. We might get something down here against these 30s, just that lows there. Otherwise, this is another point to look at. But these are just potential areas that I've got flagged on the chart. And obviously 140 will be the bigger level, being the big break point and the big figure down there. But this might be setting up for another little break trade. I didn't trade the 140 break in the end. I bought the dip into it last week to add to my core longs. I might do a little break trade up here if we get above there and start holding it. But I might wait for just a confirmation move again before getting in that one, just to see if I can add a little bit and see if this one keeps going. But as mentioned, it might be getting a bit of help from oil. Oh, I'm looking at this one, but for some reason that feed has paused. Let's go. Let's just pick that one for now. So oil was looking a bit weaker this morning. That's despite that news from the US about allowing weapons. I thought that might hit risk trades a bit more than it has. I see oil up a bit further, but it hasn't. We're still knocking around these low levels. I'll just put it back onto my chart because that's the one that's got all the techers on it. So forget this price at the moment. As I say, this feed isn't working, but you'll get the look at the levels anyway. We're still in this zone down here, and see if we get a bounce from it or whether we're going to be heading lower. But dollar CAD certainly might be paying attention to oil for once at the moment. Copper, that had that decent rally back last week, but it hasn't held it. Although we have pulled back to near this level. Didn't do much on the way down, but now afterwards, there's quite a volatile move. Now afterwards, we're seeing a bit of support coming in there, so it could be a bit of fresh support coming in after that moves. Obviously, China, a big theme behind this as well. Yields, that's told a bit of a story. We did have a break, just a moment where it broke above 450, and it might have been looking like it was going to have a go at rallying, but that didn't last. It looked like maybe some people were after a bit of a stop hunt in 10-year notes, but we had a little poke above 450, and it got a real good slap down back to 440s. It's coming back again. Okay, if we get another test up here, likely is we're going to break it this time around, and again that could be a bit of a boon for the dollar. So keep an eye on your yields throughout today. Well, you should be watching this chart all the time now for the moment if you're trading in the dollar. US 2s, similar theme. Had a high, just nicked a new high, then we got to push back. But as you can see, sellers keep coming in if you're talking about the price keep knocking it down, knocking it down, knocking it down. So if we get a break down here, again, it could get the dollar moving a bit higher. So keep a very close eye on yields. Just to go back to the 10-year yields in price, this was the level that pretty much 109s equates to that 4.5%. So there's probably going to be a ton of stops sitting through this level here. So if it does break, yields going through 450, then it could be a bit of a dip, maybe down to 108 pretty quickly, and a bit of a kick on. So always be looking at yields on your charts. Let's have a quick look at gold. Cool, you're not quiet today. All I've heard from is Michael this morning in the old chat. You lot half asleep as well, have you? Let's see. Let's zoom in a bit. At least let me know you're there, guys and girls. Cool. You can say good morning at least. Come on. I know there's plenty of you watching, but maybe a lot of you being quiet at the moment. You must all be hungover. Gold, it's bounced up to this 25.90, 26 zone. It's just sitting there sort of pretty much bang in the middle at the moment. So it's a bit undecided what it wants to do. If we're back above 26, then it's got a chance to, perhaps claw back a bit more of these losses. Next level above 26, 20s, 22, 25. Just all these highs and lows, or these tests that we got along here. So that'll be the next level. Didn't quite, maybe I was a bit greedy, didn't quite get down to my level down there by a couple of bucks. So, I would have been looking to hit it there, as I say, maybe just a bit greedy, not waiting for that level instead of getting in where it got close. But can't trade backwards. Would be interesting to see if we did get another retest there, how that handles. But if that retest comes because we fail up here, there would be a bit of danger that we're going to go through that level and maybe go and have a test at the next level down at the 24.70s. There you all are. There you all are. God, blimey. I wonder, you've been half asleep this morning, you lot. I don't know. Anyway, good to see you all. Waiting for the coffee to kick in, James. Yeah, tell me about it. I'm going to go and have my second cup in a minute, I think. I'm probably going to do about a couple of litres of that today. Quick look at stocks. We're turning around this level here. We did have a little break below last week. There was a couple of odd bits and pieces down here around the 55s, but now just this morning we're back holding this, what do you want to call it, 75 level. So a bit of an extension, and this stocks, as well as gold, sometimes like to just do a little bit of an extension, so you can plot your lines as best you like, but then it likes to go through. But straight after, we're trying to hold this level again. If we do hold this level today, again, it might give a bit of impetus to see it moving back at least above 59s, but we've been running into trouble already around 58.95ish. So again, another bit of a tight range between the high and where we're sitting today. So we could be seeing things a bit lower. Again, what happens in yields is probably going to be a big driver of this one. But also be careful about that geopolitical risk. If Putin comes out with some stronger words against what's going on with that weapons use stuff, then we might see risk taking a bit of a turn, and it could see stocks potentially coming down a bit further. Adam, he's definitely half asleep. Oh, dear me. You still long? Anders, you still long against 105? Good stuff, mate. Same as me. Still holding my longs there. I'm glad I got some of it away. I would consider adding back on another test of 105. But again, I'll be keeping a close eye on yields. If yields are breaking 4.5% in US 10s, then this 105 will probably be in real danger. Okay, so I'm happy to add back, but it depends on why we're down there. Yeah, good luck to you, my friend. And let's hope that it keeps going higher while we're long. Main King, which dollar pair do you think has the highest move potential once a dollar reversal happens? Good question. Good question. I would have to say probably dollar yen. Because we've still got the higher volatility there, so it's likely to move harder and faster than some of the others. And if that's coming because yields are dropping back, that's going to be a double wind. And then the Bank of Japan effect might play on that as well. If they decide that maybe they're going to go in December, or they team one up, so there'll be a double wind factor there. But the question is, I think they're all moving the same direction if the dollar's going to reverse. What you need to be looking at is what's going to cause the dollar to reverse. I think that's the bigger question, rather than what pair is going to move the most. Dollar CAD, that could be in the frame, given how far and how fast it's moved recently. This has been a real strong trend just from October. We've done near enough 700 pips. Okay, just a month and a half, or just under 2 months. So that's been a strong one. What would cause the dollar to reverse, as I say, I think is the bigger question. I think that's twofold. I think we're potentially heading to a situation where the market might be getting too hawkish or too undovish over the Fed. They're already striking out cuts for next year, lowering how far the Fed might cut to. And I think that's where the risk is for a dollar turn, because if we do see the data starting to turn, get over this weather business with the NFPs, and we start seeing more normal numbers, if they're going soft again, then that's going to catch the market on the hop and potentially lead to a bit of reversal in the dollar. But then on the flip side, we got the Trump trade, and no one knows how that's going to turn up. But again, the market might get a little bit too hawkish over what tariffs mean and how far tariffs will actually go when he announces them. So again, that could potentially lead to a bit of a dollar reversal. I'm in too much. Usually by now I've got an idea for next year, or I'm starting to form ideas what I think for next year. I'm not certain what the dollar does. I can see the dollar continuing to strengthen, or I can see it continuing to be strong. But, I'm still looking at yields and thinking, yeah, they're up here, but, get something like the 2-year yields. We're getting to levels where it's going to potentially cross over where Fed rates actually are, which creates a bit of a disparity normally. And if the Fed are going to keep cutting, they're going to be getting their rate close to where 2-year yields are. And if 2-year yields rise above that, 10s are already getting there. But obviously that's a longer duration. Then it's going to create a bit of disparity. Until we know what Trump's going to do and whether it's going to be as hard as the market expects, or the data either keeps getting stronger or keeps turning, then I'm in the dollar remains strong camp. Let's just say that. It could go up further if the data heats up, inflation starts going back up again. Then yeah, we're going to see much higher dollar. Could be talking dollar yen, back up pretty quickly to 160s, if not more. That'll probably be the euro through 105 and heading towards parity, that sort of thing. But yeah, I think it's a bit of a coin flip at the moment. I wouldn't be setting up to position either way. I'll just be reacting to what's going on. But yeah, normally I'm getting a little bit of a feeling, what might happen over the next year, and whether I should start getting positioned one way or another. I'm more likely at the moment to be a dollar dip buyer than a rally seller. But obviously, pick your levels, pick your pairs. I'm short the dollar versus the euro, but that's because it's on a big, huge level that I'm happy to trade. So that's more a technical trade than it is a fundamental trade. But yeah, and conversely, it's not just about the US. Do we finally see a pickup in Europe, the UK? It's been, they've been dragging along the ground for long enough, or do things get worse? in the economies. I've got a feeling perhaps things might not get too much worse. I mean, you know, everyone's been trading at sort of flat in terms of growth, bar the odd exception like yes, Spain's and whatnot. And I don't see any reason why things should get much more worse. It just depends on, you know, how much better things might get. I'm not expecting economies in Europe, UK to start producing 2% growth each quarter. But yeah, if there's some green shoots that keeps them away from the lower bound, the recession line, shall we say, then obviously that might be a bit of a boom for those currencies, euro, cable, whatever. So you might see a bit of a dollar reversal, but it will be more on those improving than the US side getting weaker. But we're all data dependent. We've all been that way for a long time, and we're going to continue to be so. The trades, just short term, are going to be between the market getting extremist or not. You know, over the Fed, maybe the market gets too hawkish, that will create a reversal if it doesn't come to pass. So yeah, overall, long term, don't have a feeling. Short term, go with the flow, as we like to say. Matthew, doesn't look overly positive. Oh, going back to the S&Ps. Doesn't look overly positive. You're agreeing with a break of 4.5%. Yeah, might be basing about of risk off. No, I mean, it doesn't look positive. You know, another dead cat bounce looking move in this one, S&Ps. I thought it might hold this level on the way down. It tentatively tried to hold it, then it broke, then we held below, but we're holding above. So this is a bit of your pivot area for today. Coming into the market, you know, another move under there, then we're probably heading much lower, and then you've got to look at your levels down below to see where the decent ones are. Got another one, 57.60s down there. So yeah, not looking good. I can't remember what we've got. When is the Black Friday sales? That must be coming up soon anyway. And that's one thing to look for, because now I think it's Adobe who produce retail sales data pretty fast after we get, you know, Black Friday, Cyber Monday sales. So just keep your ear out for that. Well, obviously, I'll keep an eye on it as well for when it comes out. But the last couple of years, they've been doing very fast sales numbers because they can measure the online stuff at least, rather than the hard stores, bricks and mortar stores. So as soon as we get those sales, we look at the data when that comes out a few days after, just to see how the economy's been doing, whether people have been holding back for these sales numbers. Oh, what's going on in dollar yen? That's just had a ping up above 105. What's going on there? Let me just have a look, see if there's any headlines out. Not that I can see. Anyway, that's back above 105. So I hadn't looked at dollar yen, so good time to do so. This 105, we came back below, tried to have another go this morning over Asia, couldn't get through. Now we have another go at getting through. So this again is becoming a bit of a pivot point here. Get above there, then we might go and test this 155.70s again. But once more, it's not looking like these are just minor pullbacks at the moment. Okay, there's no signs that this trend is, at least short term, is changing at all. Dips are getting bought up. What's going on? Let me just have a quick look at yields again, see what's happening there. Yeah, a little bit of a spike up there. So yeah, following yields, as I said, keep an eye on this 4.5% level. Thanks, Michael. 29th, so next week. Okay. I better. I won't say that too loudly, otherwise the wife will hear, and she'll stick it in her calendar, and then it'll cost me a fortune. Right, I think we'll call that a day for today. Hopefully, got you all set up and straight for the week ahead. Good luck with your trading this week. Stay safe. Thanks for following us at the Flow Show, and you'll catch us here all week as usual, as well as on the various shows, F.A.C.E and whatnot, and the subscriber shows for ForexAnalytix customers. Have a great day, everybody. We'll see you all tomorrow.